Good afternoon, Finance and Coffee, and welcome to this special edition of a Q&A. With us today is the lovely Ebony from Bluestone, State Manager in Victoria. We've got Tim from Accession Finance, MD of that business there.
That's right.
And then we've got Gabby from
Tri-Step Solutions.
Yes, I was about to say the wrong word again. So basically, thank you for coming in today. What we're trying to do today is to discuss what the audience, in terms of multiple ways to look at a deal where I suppose you could call it a deal is declined. So probably I'd like to start off first with you, Ebony. Now, one of the first things I'd love to ask you is because we hear about near prime products. So would you be able to just quickly tell the audience what that means, because they don't really associate that sort of thing with Bluestone?
Yeah, definitely. I guess if you're looking at the changing of the landscape 6 to 12 months ago, a lot of the brokers weren't looking at the near prime space. They were particularly just looking at like prime space vanilla deals. But because of the difference in the landscape changes, there is no such thing as a vanilla deal anymore. So brokers are having to look outside the normal big four and having to go into that near prime space. I guess, when Bluestone came back into the market in 2013, we didn't specialise in near prime. It's only been new for about a year. So I guess a lot of brokers aren't thinking about Bluestone as being into that near prime space, but they need to start thinking about it for everyday deals.
And when you say near prime, what are we talking about? Are we talking about no default, or there is a default?
At Bluestone itself, in their near prime product, will cater for defaults up to $1,000. It doesn't matter whether it's paid or unpaid, so they can technically have 5 defaults under $1,000 and they'll still be in the near prime. Near prime rates with us are 4.14, which I think is pretty attractive. They can still pay out your tax debts, your business loans, and have a bit more flexibility than the average prime deal.
And we're talking about, obviously, with deals where credit scoring is majorly important. So with the traditional lenders, you think someone who's clean would go to those lenders, but then internal credit scoring kills the deal. So that's where something you guys can
Correct. Yeah. So Bluestone doesn't credit score. We don't have positive reporting. So we don't really go into the nitty gritties as prime space would. So we do have that flexibility.
Fantastic. Now, Gabby, the next question will be aimed at you, because I think a lot of the audience are not aware of what you do, or the industry or the business that you guys do. I have spoken about it a couple of times on Finance and Coffee, but it is something that is quite a useful string to someone's broker's boat. So can you tell the audience quickly what you do as a debt negotiator?
Well, debt negotiation is pretty much, in summary, an agreement between the bank or the creditor and the customer for a variation on the repayment. Typically, I would negotiate a reduction of the full final balance. So, for example, if we have a $10,000 credit card, and for whatever reasons I submit to the lender a proposed reduction of, say, $4,000. So if it's agreed to, $6,000 is paid and the balance of $4,000 is written off. The catch of what I do is, in order for the banks to accept that reduction, they want that payment. For example, the $6,000 is sent to 14 days. And most people who are in financial hardship don't have access to funds. And that's why we work in the mortgage industry. So we tap into the equity of a property and use that to pay out the debt.
So there's always needs to be a mortgage refinance at the same time, or not really?
Not always. That's the majority of the cases. However, there are instances where there just isn't enough equity and the property has to be sold, or sometimes the customer might have access to funds from a different avenue, whether it's a loan from family or friends or something like that.
Yeah, I suppose one of the things where most people don't realise is that your service also means that the clients don't get a default on their credit file. Is that right?
It doesn't default their credit report. Credit reporting is very different now to what it was when I started my business 14 years ago. From what I've seen so far with the new credit scoring, it doesn't really affect what's happening on your report. Most of the clients I see are already in financial hardship, so they may have a couple of late payments. What I do basically ends up with the C foreclosed on your report. So you might have some missed payments and all of a sudden that's closed, but there's definitely no default.
So I guess I'll reiterate with the audience there, because I started my career in banking and credit cards. And what we saw there was that people who had, say, an outstanding credit card balance that they can't pay, the bank would chase that client for that balance. And when that balance is not paid off, then what the bank then does is sell it off to a collections agency.
Correct.
For a portion of the amount outstanding.
Correct.
And then obviously at the same time lodge a default. Now what you're doing effectively is basically bypassing that process, so you're stepping in before the bank actually sells the debt off.
Correct.
Yeah. Fantastic. So if you're listening in the audience right now, we'll segue back into that in terms of how that can help you with your brokers. But obviously I've got Tim here to sort of explain that as well. Tim, thank you. I've known you for a long time, I guess since you started out in broking.
Yep.
I'm very impressed and I'm very in awe of what you've been able to achieve. So you now have, I think, 3 brokers?
Yes, 3 brokers.
Yeah. And you're based in Melbourne and Williamstown?
In Williamstown, that's exactly right. Just over the bridge.
Just over the bridge, in the good side of the city.
That's right.
Now tell me about yourself. So, obviously one of the first things I want to ask you is, your challenges from going from starting a brokering business to where you are now.
Yep.
And then obviously how a business like Bluestone and the Gab's business can assist a broker's business like yourself, not just yourself, but then also the brokers underneath you.
Yeah, absolutely. So I guess, like most brokers, when you start off, the hardest part is working out where your leads are going to come from, of course. And that's where, tapping back into your previous networks, even before you decide to make the transition to becoming a broker, is something that I heavily relied on. So I guess prior to being a broker, I worked for Coles, I worked for KFC, and I also had some networks outside of that. So I guess they were the first people that I reached out to, just because your strongest referrals are those that you know, like, and trust. And I guess from my perspective, they were people that I had already previously worked with, so I had already built that relationship and rapport with. But in terms of then and now, and especially Bluestone, I think, like most brokers, the idea of Bluestone and potentially some of their higher rates, especially when you're talking about people with defaults, can be a little bit scary. I was one who, I guess at the beginning, was a little bit, I don't know, would you say?
Put off?
Put off, that's probably the best way to say it.
Yeah.
Put off and rate conscious, just because as a new broker, it was always something that clients asked me about. So
it's not something you also think about when you first came into broking, right? You never thought that there was a business like Bluestone around.
No, absolutely not. And I think, when it comes to, I guess, the your accreditations, there's a lot more of the traditional lenders, so you don't hear a lot about the options that lenders like Bluestone can actually offer for you. So it put off by the rate, and I think the first time that I used it was a situation where I was forced to do so. The client didn't have an opportunity anywhere else, and from that point I haven't turned back, because in addition to being able to provide that solution, and as a broker that's what we're there to do, the support that I got from the guys was amazing. So it was great. And in regards to your last question, which was in and around, I guess, scenarios that I now see, talking about debt consolidating, I mean, there's no, I guess, common scenario, but in most cases, yes, the people that come and see you have found themselves in financial difficulties. They're looking at their options in order to be able to clear the debt, clear the name, and they're really struggling. And some situations, as Gabby and I spoke about earlier, are quite sad. And it's great just to have, I guess, an option out there for them. And I guess for me, they've gone through the motions with, the lenders, and they don't find that, they're too compassionate when it comes to their inability to be able to pay for the loan. They've reached out to their own banks and a couple of brokers who just find it in the too hard basket. So for those that do get an opportunity to get to me, it's really nice to be able to put a solution together for them.
Yeah, and obviously that's where Bluestone and the debt negotiators business comes into play. It's about a solution, isn't it? So with regards to, say, the first time you had to deal with Bluestone, for example, so because obviously then, that's who is Bluestone, how they're going to help you. Is the process easy? Is it hard? I've never had to use it before and so forth. So would you be able to, I suppose, walk us through in terms of how you found the guys?
Yeah, so I guess the hardest part, but I guess that's the case for all brokers with every lender, is just understanding the products. And the first thing that I could say to Bluestone's credit is, their ability to be able to get a hold of either the BDMs or, of course, the credit teams who are always willing to provide you with those answers when you do get stuck. There are some BDMs out there that do and appreciate that it's not an easy job and they've got lots of brokers on their portfolio, but you always get a call back. And I think when you're looking to, of course, find a solution for the client and hopefully put them at ease that you're going to look after them, you too need to be able to get your answers that you need straight away. The other part that I love is obviously the flexibility as well. So that comes down to the products that they then offer, but at the same time as well, their ability to work directly with credit in order to sometimes get a deal over the line that wouldn't necessarily be considered black and white. And that's the thing, when you're talking about clients with defaults and clients with, of course, that require debt consolidation, there's no black or white. There's not a policy that I think can be written to say that it's either yes or no, and that's where it's great that you've got the support to be able to go back. And I've called on Ebony and Ebony a few times to be able to go back and clarify that for me beforehand. So yeah.
And I guess to Tim's point before, when we talk about rate, a lot of the times, if we're looking at more specialist lending type scenarios, the rate is higher, but I think where brokers need to put things into perspective, it's not the rate that comes out of their bank account, it's the repayment. So a lot of these customers are actually in a better position when they go see out like Bluestone and Gabby in relation to doing like debt negotiation. They still find that even though their rate's technically higher than what they're on at the moment, they still might be better off by $1,000, $2,000 a month by wrapping everything into the mortgage, and that's what we need to sort of think. It's not all about rate these days.
Absolutely. And that was probably something that I did miss. And one of the most recent cases that I've had, it was exactly that. The client was saving over 2.5%, albeit the rate was around 6%. So by the time you go back and add up all the current debts that they had, the minimum repayments, it's well and truly better off every single month. And they were clients who were looking down the barrel of either being able to do this or lose their house. So it's amazing that you're able to provide that opportunity for them and give them that reprieve and get back on track.
Yep. So you, I suppose it's a nice segue as well, because you then become the accidental counsellor.
Yeah.
So now I'm just going to segue back to Gabby. Gabby, so your services, not a lot of lenders will work with you, or do every lender work with you? Or
well, I don't work with majors obviously, but specialist lenders, yes. So Bluestone was one of the original lenders I dealt with, and there's quite a few specialist lenders that acknowledge debt negotiations, not just my individual business, but other debt negotiation companies. And yes, they do. They understand being a company that's dealing with clients that don't fit the normal lending criteria, and realising that there are situations that are not permanent and these people just need a hand for a little while. Giving them the options, understanding that, okay, let's clean up this debt situation they've gotten from whatever that might be, clean them all up, put them into a new loan, and then they can move on with their life and keep their nose clean and stay away from credit.
So we're talking about life events, though. We're not just talking about, hey, maybe I've got a $100,000 credit card debt and I'm blind or casino, can you help me?
Yeah, look, it's very hard to answer that question. I myself specialise in people who've had significant life events. However, I do come across deals quite often where if I do a bit of research and I see really high debt, I'll look at the lending from the individual lenders as well as a whole, and quite often can see what I consider to be a bit of equity stripping or just not very ethical lending. So, it could be $200,000 for one person credit card debt. You've got to question, has the bank or all the banks done the right thing by this client in giving them, increasing their limits or giving them the credit cards or personal loans? So it's not always a black and white, yes, I'll only deal with people in financial hardship due to life events. Sometimes it is just years and years of credit that have accumulated from questionable lending.
So I guess the thing there is that when I first came across a business such as yours was when a deal which would have fell over because you just said it yourself, credit cards of debts of $100,000 to $200,000 on top of an existing mortgage. So when a broker comes along to try to refinance a mortgage, they can't do that because the LVR is not there. And given that we're in a state right now where the value is going down, that's going to become much more prominent.
More common, that's right.
Yeah. So what are the things, say, from your point of view, to talk to someone like Tim and go, hey, maybe this is something that you should also think about, so that your services can be thought about, so that you can also use that in tandem with Bluestone.
Absolutely. So, like Tim would come to me with a scenario, and we'd look at it together. We'd look at, I look at the client's history, what the life event was. We look at the estimated value of the property, and what the outgoing mortgage is going to be, what all the debts are combined, any fees that are involved, and then we look at it as a whole and work out if we think there's a bit of a heartbeat there. And then if we think that we can work together and get a true valuation done, and if it comes in around that figure, then we go to Bluestone and say, yeah, let's move ahead.
So you would talk directly with Bluestone, or would that be through Tim?
Generally, I start off working with the broker, and then towards the end, when it comes to having all the debts paid out, I work a little bit with Bluestone. Quite often at the end, I'm working with the settlements department and all their your legal department. Yeah. So you have your own legal department that does the settlements, don't you?
Yeah, you mainly just be dealing with our settlements department with all the payout figures and updating our back end solicitors.
Yeah.
Because I guess the challenge is at the start of the process, you don't always know what the end figure is going to be. So yeah, I guess to add to that, I guess we also need to look at available equity as well as borrowing capacity, because ultimately the client may have the ability to be able to tap into that equity to pay out the debt, but ultimately if they can't afford it, like anything, it can't be done. So I guess it's a real juggling act, I guess, where we all need to communicate together to hopefully get to that end goal. But yeah.
So say
1, 2, 3.
So the conversation so far has been paying the debt completely. Now you brought up a pretty good topic, which is there's not available equity. So does that mean, Gab, with regards to your business, will some lenders allow residual debt?
They will, some depending on serviceability and depending on the client's personal circumstances. I think you guys will probably answer that better, but in my experience, yes, I have done quite a few loans where some residual debt has remained.
And I guess that's where it comes in. They may have initial discussions with their debt negotiator. If I had a broker, I would go to Gabby and sort of go, this is the sort of situation I've got at the moment. Gabby would sort of say, yes, if with the figures that you've sort of given me, I can definitely look at doing something. And then I guess it really hinges on the valuation. So they can sort of say, well, this is what we think we can do, but it won't come back into black and white. And once the valuation's done, then they know exactly what they can work with. And I think that gives Gabby a little bit more flexibility when she actually goes to negotiate with the lenders to say the valuation's been done, this is exactly what we've got to work with, basically sort of take it or leave it. And then that's when we work with, okay, this is what we've got to work with, have we got enough capacity to be able to pay out everything, or can we only pay 3 of the 5 debts out? And providing that they've got serviceability remaining, and we can leave those debts left in there and not pay them out.
So we're talking obviously where the broker and debt negotiators come to Bluestone, but how about situations where the brokers come to Bluestone, got the doing the application, and then it's failed because of lack of equity and so forth?
Which that happens. They think everything's all hunky-dory according to their figures that they've been given off the customer, then they get the valuation, val comes back, especially in the climate that we're in at the moment, the valuations are normally coming in a little bit lower than what everyone thinks they're going to be. And then, for example, Bluestone can only go to 85% inclusive of fees. It might be a 90% LVR now or a 93% LVR, which means that we can't try and assist that borrower, and that's when we'll sort of refer them over to a debt negotiator and sort of say, potentially, Gabby, this is what we've got to work with. We have to get this loan amount down to 85%, so at least Gabby knows how much she needs to be able to reduce the debt in order to make the deal work.
And in the event that I guess it can't be all cleared, and that would be the ideal preference. Because I guess clients who have got in that situation love the idea of starting fresh. It would look back to their ability to be able to pay it. And actually, if you started off with $80,000 worth of credit card debt and you were able to negotiate it down to 30, then absolutely, from a serviceability perspective and their ability to be able to manage it moving forward, would be a lot better overall. Especially where, like you said, the equity isn't there. And that's where too, as a broker, our role, as we know, doesn't stop. And the conversation then also goes on to, okay, well, let's sit down, let's have a look at your budget, your expenses, and work out how this ongoing expense of X is going to be factored into your lifestyle. And in most cases, certainly where I've found, clients go, that's easy, because they've historically, prior to that, been paying double, sometimes triple the amount of their payments. So the idea of having a small residual leftover amount, in addition to giving them that freedom, is something that's certainly manageable for them.
And I feel something like that, then would that mean, as gut feel, but say if they come to you, you've gone to your networks to reduce a debt without actually paying it out, wouldn't that mean that technically that client's for life? They should.
Oh, absolutely. And they are. You turn them into raving fans, and they're the ones that are shouting out on Facebook and telling their friends, everything you've done to help them. Because I guess, in my case, I had, like I said, a client who was at risk of potentially losing their house. Now imagine sitting there and having to have that conversation with your wife and thinking about your 3 kids and where you're going to put them. And then that conversation, when I called the client to say that they'd been approved, the gentleman actually cried on the phone to me, because it meant so much for us to be able to get that over the line. And that then, I guess, resonated back through the relationship that I built with the guys and helped me achieve that. So it's a great feeling.
And we understand that a lot of brokers think that they have to get all these negotiated figures done up front before the application is actually submitted. As long as, like with Bluestone, they actually put in, they've got $100,000 worth of credit card debt, but we're wanting to reduce it down to 50. That's basically how we will continue working with the application. Correct. It'll just be a condition that as long as you've sort of negotiated it down and it will fit, then that's basically what we've got. So then it gives us time to start proceeding through the application, because a lot of these lenders, will like to sort of give you like a payout for, 7 to 14 days now?
Yes, that's right.
So we'd like to sort of keep the process moving so they don't have to get all these done up front before they submit the application.
Excellent. Now, next question is for you, Ebony.
Okay.
Now, we're talking so far is on personal debt.
Yeah.
Now, would Bluestone accept refinancing on business debt
Yes.
and ATO debt?
Yep.
Fantastic.
Yeah, and I think that's where we're getting. So a lot of the other lenders are pulling out of this space at the moment, or they're getting sort of tight with the commercial. We can pretty much sort of pay out anything. So whether it's second mortgages, private loans, business loans, tax debt, we have the capacity to be able to pay it out.
Now, with regards to tax debt, obviously, then it makes sense because you pay it out, then you can actually get on with your life and do other things, isn't it? So,
that's it.
Go back to you, Gabby. Now, do you also negotiate business debt?
Yes. It is dependent on how the business is running. If the business is highly profitable, then I would have to say no. But if the business is struggling or is in liquidation, then yes. So that's me personally in my experience. I can't speak for other debt negotiators, but generally, when you're going to a bank and asking them to take a haircut, you need to be very upfront about the situation. So if there's a property with 80% equity and the business is in profit of $500,000 a year, why would the bank take a haircut? It's a little bit of exactly. Yeah. But if you've got a business, if you've got a mum and dad who, their equity is very minimal, and they've got a little cafe, and that cafe is really struggling because, big shops in the area have closed down and there's just no walk-through traffic, and the businesses, you can see it's really struggling, then yes, absolutely, then I would be able to negotiate a reduction there.
Fantastic. So, and Tim, this will be the last question for you.
Thanks.
So, just going back since so from the beginning of the conversation, we're talking about residential consumer debt. Now we're talking about business debt. You as a broker in business, do you look at the full gamut of offerings, or do you just only sort of specialise in a particular set, which is just consumer?
Yeah, good question. I think your networks naturally gravitate towards you. So if you've done a bucket load of residential investment and personal lending in the past, there's going to be primarily what you then get in terms of referrals. In saying that, of course, you're always presented with an opportunity, whether that be through a referral or your existing clients, to provide that opportunity. And I guess, looping back to what Ebony said, you've got situations where a lot of the major lenders aren't, of course, prepared to take that debt on, or there's a massive disconnect between, of course, the resi space and the commercial space, and that can be quite difficult. And for me, you're seeing more and more Australians becoming self-employed, and most of these Australians who become self-employed is because they were once good at a job. Doesn't necessarily mean that they're good at running a business, and they find themselves in a situation where they're not budgeting for, their GST, for instance, their tax, and everything else. So it's great to be able to have, a one-stop shop, so to speak, in order to be able to provide those solutions. And again, looping back to what I said, having that flexibility and the support and the networking team to be able to achieve that. So yeah.
So that means it's also another opportunity for a broker to reach out to a referral source as a business banker.
Oh, absolutely.
So I think most brokers will go to an accountant, financial planner, or real estate agent. There are a few who think a banker can be a referral source, and even fewer still can think of a business banker as being a potential referral source there too.
100%, and that's probably the advice that I give to any new brokers. The temptation is to go out there and align yourself with a real estate agent, accountant, or financial planner, because guess what? That's what everybody needs to do. But because everybody does it, it's very limited. They've already got their relationships. Think outside the box, the non-referral relationships like the one you've suggested, you absolutely then have a better chance and more success of getting yourself off the ground faster.
Excellent. Now, and Ebony, got a very last question. I might have said that already, but I'll say it again.
No, that's all right.
Okay, so your team, I've seen, has grown massively in the last year.
Yeah.
And obviously that's because of the way that business is going and the economy and so forth.
Yeah.
Do you expect that to continue and then more brokers?
Yeah, definitely to continue. So at the moment there's 5 BDMs in Victoria, and I'm a state manager, so there's 6 of us. But we've literally did a presentation of the day at our movie night where the near prime had technically gone up from 17 to 18, 92%. So that's massive growth. I guess it also went up because of the fact that we didn't really have a near prime offering, and now we do. So it's now about having to change that mentality for brokers. They might think of us for those hairy gorilla type, really complex deals that we used to do. We still do them, however, we need to change that mindset of now we do offer near prime, that they need to be thinking about us for those near prime offerings, etc. So I think it's just going to get worse and worse for the normal prime space, being able to get deals across the line, and I think it just means more and more customers are going to be fitting into our space.
Yeah.
Especially when you look at the likes of the debt consolidation, we don't have any restrictions either. So there are a lot of lenders out there that might sort of have a restriction of only being able to pay up 4 debts, and it doesn't allow the customer to do what they initially want to do. Whereas we can pay out potentially as much debt as what they want. There is no restriction on our near prime product.
Fantastic.
Yeah.
And Gabbrielle, close up with you. Now, what would be your one tip for the audience who are listening in or watching this right now to think of engaging in services such as yours?
The one tip, look, anyone that has credit card debt.
Is it just restricted to credit card or something?
Oh no, well, unsecured debt, so personal loans and unsecured personal loans and credit cards. Look, there's no black and white with where businesses like mine can get involved. I've successfully negotiated second mortgages, caveat loans, even some secured debts. It just depends on the client's circumstances. If you've got someone that's in their early 20s with a lot of equity in their property and there's no real significant life event, it's going to be difficult to negotiate. If you've got someone in their 60s with ample credit card debt, very restricted equity, then I'd be more likely to get involved. But anywhere where there's ample debt and you're having difficulty with loan-to-value ratios, I would suggest contacting a debt negotiator and seeing what you can do.
And I think the key as a broker is to start the process early.
Yes, correct.
You quite often will get a phone call from a client explaining their situation, and as you've heard, you're able to prevent that from becoming a default if you're able to get into it earlier, and there's naturally less people involved at that point as well. So, the more relationships you build, the more likely that people are going to come to help. See to it with that urgency, and I guess call up someone like Gabby to get it sorted.
But on that note too, I should note that you will come across clients where the debts have already defaulted and have already been sold to debt collection companies. That doesn't mean we can't do it.
That's right.
Not at all. So we can still get involved and tidy that up for everyone.
Yeah.
Ebony, Tim, Gabby, thank you so much for joining me today.
Thank you.
Yeah, thank you.
And hopefully we'll do it again.
Great.
Thanks, bye.